Welcome back to the deep dive. We've got the latest from Sona BLW Precision Forgings Ltd, Sona Comstar. These are their Q2 FY26 results, hot off the press from October 27th, 2025. And we're not just doing a quick numbers check here. This is really about digging into their strategy. They're a big global player in mobility tech. So our goal today is to cut through the noise a bit, find the really critical stuff, the electrification moves, this kind of weird financial situation this quarter, and some, well, frankly, amazing tech developments in motors, even robotics.
Yeah, that financial situation, that paradox is exactly what makes this so interesting. You've got record highs everywhere, revenue, profit, their best quarter ever. But right underneath that, there's some serious chop in the EV market segment, the segment that's supposed to be their big future growth engine. It's a fascinating look at how a company juggles immediate wins with these big kind of risk-managing bets for the long haul.
Okay, let's start with the good news then, the celebration stuff. Sona Comstar definitely delivered on the headlines. Q2 FY26 was their highest ever revenue, EBITDA, and net profit in a quarter. And the numbers, they're solid. Revenue hit 11,435 million INR. That's up 24% year over year. Pretty strong. Net profit, Pat, also up 20% year over year, reaching 1,728 million INR. So, yeah, great growth. Looks like great execution.
Absolutely. The top line growth is really impressive, no question. But like you hinted, if we look just a little closer, that's where the tension starts. The margins tightened. Yeah, the profitability number we always watch, the EBITDA margin, it actually slipped. It went from about 27.6% last year down to 25.3% this quarter. And the company points to adverse operating leverage and product mix as the main reasons for that. Well, pretty noticeable drop of 2.3%.
Okay, let's unpack that phrase, adverse product mix. Sounds technical, but it feels like it's right at the heart of this whole paradox thing you mentioned. What's that mean in simple terms?
It means basically that while the company sold more stuff overall, the type of stuff driving that growth was less profitable. They were really high margin products. Typically the newer EV components, they kind of hit a speed bump this quarter. So the growth that pushed up the total revenue, a lot of that came from their, let's say, more traditional lower margin areas like standard driveline parts, railway components, things like that. And that shift in what they sold squeezed the overall profit percentage, even with way more sales overall.
Right, and the reason for that shift in mix, that's the sort of surprising part hidden in these documents, isn't it? We're talking about a sudden drop in their core EV business revenue.
Exactly. That's the kicker. The source material shows a pretty significant and maybe unexpected fall in their battery electric vehicle, or BEV, revenue. For Q2 FY26, BEV revenue landed at 2,647 million INR. Now that's actually down 17% compared to the same quarter last year. And if you look at the first half of the fiscal year, H1 FY26, it looks even worse. BEV revenue dropped 21% year over year.
Wow, 21% down in 6 months. In the area that's supposed to be their future. I mean, the whole story around Sona Comstar has been this big pivot to EVs. Is there a risk they're just calling this a blip? Could it be, a sign of something bigger, like a global EV slowdown?
It really is the million-dollar question, isn't it? If you only looked at that BEV number, yeah, you'd be worried. But the fact they still hit record overall revenue despite that headwind tells you two things. First, their other businesses, especially rail, traditional auto parts, are performing really, really well. They're resilient. And second, it shows they aren't actually backing away from EVs. I mean, even after that big drop, BEV revenue is still 32% of their total auto product sales in Q2. So it looks like they're using their diversified base to ride out this current market bumpiness while doubling down on securing those long-term EV deals.
Okay, that makes sense. It leads us nicely into the future outlook then, because if the present feels a bit shaky on the EV front, the future pipeline, well, that looks completely locked into electrification. I mean, you look at their net order book, it's just huge, 236 billion. Just to give you a sense of scale, that's like 6.8 times their entire revenue for all of last fiscal year, FY25. That's a massive amount of future business already booked.
It's enormous. And that scale is kind of their insurance policy against these short-term dips. And the really crucial detail is the breakdown of that number. 70% of that massive order book that's under 165 billion worth is specifically for EV programs. Only 24% is non-EV automotive, and just 6% is the railway business. So the strategic direction towards EVs, it's completely dominant in the long-term plan, even with this recent sales dip. And they keep adding to it. They won 2 new EV programs just in Q2, bringing the total to 62 programs with 32 different customers.
Okay, let's zoom in on those new wins, because they seem to signal more than just volume. They won 2 deals for active suspension systems. Specifically, These integrated motor controller modules. That sounds like it's more than just a simple component, right?
So it's a big step up the value chain, a significant leap. They're moving from supplying, you know, bits and pieces that go into a system to supplying the complex, high-value integrated system controller itself. When you supply the integrated motor controller for something like predictive active suspension, you're embedding your tech, your IP, much deeper into the vehicle's brain, essentially. That usually means more revenue per vehicle, a stickier relationship with the car maker, and a solid place in those next-gen high-performance cars.
And these aren't small customers either. One's an existing new age Asian EV maker, the other's a big European name known for luxury performance cars. What kind of value are we talking about for these new suspension deals?
The lifetime value just for those two programs is pretty hefty, $8,200 million combined. And the start of production, the SOP, is set for Q2 FY27. So the revenue benefit from this higher margin fancy tech should start kicking in right around the time you'd hope this BEV market volatility starts to smooth out. It feels like smart planning, proactive.
Right, managing the risk. And it's not just about fancier techs, they're also spreading out geographically. There's news about their New Mexico plant landing its first order.
Correct. The Driveline Mexico plant secured its first deal. It's supplying differential assemblies for a North American OEM that makes recreational off-highway vehicles, think ATVs, side-by-sides, that sort of thing. That adds another $2,600 million to that big order book. This one's maybe less about cutting-edge tech and more about smart geography. Building in Mexico helps them serve the North American market better, maybe hedge against trade issues, and get a foothold in that pretty robust specialty vehicle segment. SOP for that one is a bit further out, though, Q2 FY28.
Okay, now let's get to the tech section because this feels like maybe the biggest aha moment in the whole update. Management talked about shifting motor designs because of the unavailability of heavy rare earth magnets. Now that sounds like a massive headache, a huge supply chain risk.
Oh, it's a huge risk, an existential one for a lot of motor makers worldwide, especially with how concentrated the supply chains for those magnets are. And Sona Comstar's response wasn't just finding new suppliers, it was basically engineering their way out of the problem, building self-reliance. They've successfully developed, tested, and validated a rare earth-free motor.
Wow. Okay. What's the tech? Is it something completely new they came up with? Sounds really innovative.
It is. They're calling it the Ferret-Assisted Synchronous Reluctance Motor, or FESN-RM for short. The strategic win here is massive. First, you just eliminate that huge geopolitical supply chain risk because it uses absolutely zero rare earth magnets. Uses ferrite instead, much more common. Plus, they're claiming their proprietary design gives it advantages like better cooling, less noise and vibration, NVH, and better efficiency over a typical driving cycle compared to other motors out there. Right now, the tech specs show it's aimed at applications needing about 48 to 115 volts and somewhere in the 5 to 20 kilowatt power range.
How big a deal is that, developing their own proprietary rare earth-free motor? Does that fundamentally change their position and negotiating power maybe in the whole EV ecosystem?
I think it absolutely does. It potentially shifts them from being just another supplier vulnerable to global material shortages into a technology leader offering security and performance. It's really an investment in strategic independence. It makes them a potential solution for all those car makers who are, frankly, terrified of having their production lines halted because one country controls the magnet supply.
That's huge. Just that would be enough. But the tech story doesn't even stop with cars. They're making another massive leap, completely outside automotive mobility into robotics.
Yeah, this is where that mobility technology tagline really starts to stretch in interesting ways.
Yeah.
They've signed an MOU, a Memorandum of Understanding, with a German company called Neurorobotics. Apparently, they're real pioneers in cognitive robotics. What's really interesting is the potential synergy. Sona Comstar's bread and butter is high-precision gears, actuators, drive units, the mechanical bits that make things move precisely and powerfully. And what do advanced robots, cobots, even humanoids need? They need incredibly precise, powerful, often miniaturized actuators and gearboxes to control all their movements.
Ah, okay. So they're taking their core skills in motion control and precision manufacturing and just applying it to a totally different, potentially massive new field. What's the plan with this German company, Nora?
The stated goal is to work together to develop advanced components and tech needed to actually industrialize, meaning mass-produce robots, cobots, and humanoids, initially for India, and then other markets they agree on. This is pure future-proofing. If you look at their bigger product roadmap, they call it EPIC mobility. You see this vision clearly laid out. They're targeting things like eVTOL propulsion units, flying taxis, basically industrial robot gearboxes, drive units for autonomous warehouse vehicles, AGV SAMRs, and yes, even actuators for humanoid robots. It looks like they're strategically planting flags in pretty much every area that involves controlled, electrified movement, whether it rolls on roads, works in factories, or eventually walks around. So while all this exciting tech development is happening, we should also touch on a couple of key corporate housekeeping items from the October 27th report. These point to some structural shifts. First, a pretty major strategy change, actually. Remember that joint venture they announced with Genetic Machinery Co., Ltd., JNT, in China? Well, that proposed GV has now been put in abeyance. That's the official term. Basically, it's on hold indefinitely. The binding term sheet they signed back in July 2025 has been canceled by mutual agreement.
Wow, okay. Canceling a deal signed just a few months ago, that suggests a pretty big rethink about their immediate plans for China, doesn't it? What do you read into that?
It definitely signals caution right now. Could be several reasons. Maybe geopolitical tensions are making these cross-border JVs more complicated than they're worth at the moment. Or perhaps it's about focus and resources internally. They might have decided that the huge effort and capital needed for the rare earth-free motor scale-up and this new neurorobotics venture,
Sure.
maybe those are just more critical right now than expanding their non-core foundry business in China. They did say they're still open to maybe collaborating on specific foundry products later, but yeah, the big JV is off for now. It shows a real tightening of strategic focus.
That's a key decision. But internally, it looks like they're strengthening their team for this complex future. They appointed a new head of strategy and M&A.
Yes, exactly. Mr. Patek Sachin is taking on that role. And it makes perfect sense when you consider the roadmap we just talked about. Active suspension, rare earth-free motors, humanoid robot parts. It's incredibly diverse and complex. You absolutely need senior leadership dedicated just to managing the strategy, the potential partnerships, maybe the acquisitions needed to get all the necessary tech and IP quickly. And Sachin's background seems to fit IIT Guwahati, an MBA from ISB, 15 years doing strategy and M&A. It signals they're gearing up for more potentially complex growth moves.
Okay. And finally, we shouldn't ignore the sort of softer side, the ESG and governance stuff, important for long-term value. They got certified as a great place to work again.
Yeah, for the third year in a row. That's a good sign of internal health. And their environmental numbers show progress, too. Comparing FY25 to FY22, they reported reducing emissions intensity by 18%, water intensity by 17%, and energy intensity by 10%. Solid operational improvements. Plus, they highlighted an increase in women in their workforce, from 3% up to 6%. Still low, but moving. These things matter. They show a well-managed company beyond just the quarterly profit. #outro.
So, okay, let's try and tie all these different threads together for you. What's the big picture? It's complex, but I think reasonably clear. Sona Comstar hit record numbers this quarter, which is great, but that success was largely propped up by their traditional non-EV businesses. Those businesses had to compensate for some really quite severe short-term turbulence in their main growth engine. Remember that 21% drop in H1 BEV revenue? So their response seems to be this aggressive strategic hedging. They're locking in that massive future EV pipeline with the huge order book, 70% EV. Remember, they're innovating their way out of supply chain nightmares with the rare earth-free motor.
And they're making sharp pivots up the value chain thing, active suspension controllers, and even into totally new areas like robotics with Neura.
Right. And that sets up, I think, the really fascinating question for you, the listener, to ponder going forward, given that very real market volatility they're seeing right now in their core BEV revenue.
Yeah.
And this simultaneous big strategic push into these high value, but probably high investment areas like robotics and advanced suspension. Is Sona Comstar successfully insulating itself from the immediate EV sector risks by becoming this broader, more resilient mobility technology company? Or is that short-term pain in BEV sales going to keep dragging on those profit margins until those big new programs, the ones starting way out in Q2 FY27 and Q2 FY28, actually start generating significant cash? Something to think about. Thanks for joining us on this deep dive. We'll catch you on the next one.